Hey guys, what's going on? It's Rekt Capital and welcome back to the channel here. Today we're going to be talking about part 2 to what I've discussed yesterday in part 1 of the Bitcoin 3 macro triangles. Yesterday we spoke about some of the phases that these macro triangles go through very briefly. Check out that video for more details, but very briefly, each Bitcoin triangle forms a descending triangle, the macro downtrend and the base of that triangle, and we see this across time. And whenever we break down from that triangle, that's where we see downside acceleration in an effort to form a bear market bottom. We see this across time, across cycles. We saw this also in the past. Of course, then again, check out my video part 1 for more insight about that in more detail. And after we form that bear market bottom, we develop an accumulation range before finally challenging the macro downtrend to confirm a new macro uptrend, essentially. And we see this across cycles, and even here as well, we'll see that perfectly an accumulation range and then challenging the macro downtrend and breaking out into a new macro uptrend. So one of the things to bear in mind here, and this is going to be something that applies across cycles, and that's, first of all, retracement depth upon breakdown from the Bitcoin macro triangle. We see a retracement depth of around, historically speaking, 50 to 65%. And based on those two cycles, that's how I denoted a general range of 12K to 17K. And we know that we got 15,500, which is around the 50% mark. So essentially speaking, 50% downside was repeated from 2019 in this cycle. So retracement depth is very important to these Bitcoin macro triangles. But the other thing that's really important is the amount of time before the halving. 365 days, roughly a year, 396 days, just over a year. And here I plotted back in August 2022, even earlier than that if you look at the part 1 video, 397 days and around 365 days would be around this time of year where we broke out a few months ago in Q1 of 2023. In fact, we broke out 397 days before the Bitcoin halving. So essentially, once again, repeating the 2019 period. And that's really interesting that we repeated the 2019 period with the retracement depth of 50%, because we got 50% here as well. And we also repeated 2019 with the 397-day pre-halving period. So essentially breaking out 397 days before the halving. So we've repeated 2019 in two important facets, retracement depth and time in terms of the breakout past the macro downtrend prior to the halving. Now we know that Bitcoin tends to enjoy lower prices prior to the halving. So if you look at this blue vertical being the pre-halving prices, then of course even this price is lower than these prices and these prices. Even the old all-time highs are lower pre-halving prices than post-halving. And you see this across time, that we actually break beyond a major all-time high resistance here in the immediate months after the halving. So the same will happen here post-halving. We're going to break the 55K region in the immediate months after the halving, as we've seen in the past. So pre-halving prices are always going to be lower than post-halving prices. And that's just been a cyclical thing, a cyclical recurring theme in the Bitcoin price history. So where do we go from here? One of the interesting things is that as much as we've spoken about how 2019 was essentially repeated with retracement depth and time of macro breakout past the macro downtrend prior to the halving, we didn't see a trend acceleration just like in 2019. We didn't see price just take off in a parabolic rally, and that's an interesting thing to note. But by the same token, we also didn't see a 2015 pullback for a retest of that macro downtrend as a new support before running higher. So 2023 is doing its own thing at this point in the cycle, and that's quite refreshing. When we think about repeating 2019, we've seen a lot of that happen already, but now 2023 is doing its own thing, trying to perhaps find its local top, just like in 2019. So for the time being, we're not seeing a tremendous acceleration like in 2019. So that's where 2023 is slightly deviating. But what's possible is that we'll also once again adhere to 2019 qualities and local top just to make a new diagonal resistance here. So a lower high form here. And we'll have a new lower high form somewhere here, wherever Bitcoin local tops. So in any case, that's the Bitcoin 3 macro triangles. Retracement depth being important, breakout time prior to the halving, all really important things to bear in mind about this theory. This theory is going to become more and more important over time because we're getting more data points in terms of how much retracement do we see upon breakdown from the macro triangle, and how many days prior to the halving do we finally break the macro downtrend. And the macro downtrend here for Bitcoin has been broken a few months ago, and whenever a macro downtrend gets broken, a new macro uptrend emerges. And that's about it for today's video. Feel free to subscribe for more videos like this in the future. Like the video if you enjoyed this one and would like to see more content like this going forward. I'm Rekt Capital. Thanks so much for watching, and I'll speak to you in the next one. Speak to you soon.